What is going on, everybody? Welcome back to another video. This is one that I'm actually super excited about making. If you guys haven't seen it, it's already Dutch Bros. If you don't know what it's at and you don't have these near you, I guarantee you they're coming near you very, very quickly. And with that being said, let's cut to the intro and everything so we can get right into the guts of why you guys should know what this stock is.
I know I'm fine, but the money makes me.
Okay, guys, Dutch Bros. So I am from the Midwest. I had never seen one of these anything. I moved to Houston, Texas. I love it here, but these started popping up all around me, and I didn't know what the heck it was. I started asking people, and when I found out how their story has went, I was super interested. I've actually made money in the past on this stock multiple times. I don't actually own any of this stock for one reason right now, is because I ran a covered call strategy on it. If you don't know what that is, it's where you own the stock and you sell an option above it for cash flow, and you make the difference in between plus the money that you sold the option for. So my stocks actually got called away from me. I made a chunk of money. I was very happy with it, but I missed out on another larger chunk of money. That is the downside of covered calls. You can't be mad when you make money. But let's get into Dutch Bros. So this is ticker symbol BROS. And if you guys don't know how to find the evaluations of a company and exactly how to see their financials and all of those good things, TradingView is the easiest one for you guys. It's free, no cost to you. Definitely take a look at it. It's just do their free thing. That's what I have. I don't pay for this. And just come down here, click the earnings, find the financials, and then we can jump right into this one. Again, Dutch Bros. So a little bit behind what they do, as you can see in here, they are a big competitor to Starbucks. So if we go down in here, this will show you the news on this stock here on Yahoo Finance. It's a great another resource here. They are literally growing so fast. I had no idea what they were at first, and they're growing so fast and putting up so many locations. And guys, the lines in these places are getting longer and longer and longer. The more people that go to them say they love them. And that was enough for me to start investing, looking into their financials, and then finding out what I'm finding out here. And if you guys see anything from just this page right here, you know where I'm going with this. If you guys look at financials on a normal basis, and you guys will see, holy cow, look at this. A PE of 109.17. So that's pretty high for me. Price to earnings at 109. But Palantir's is still higher. This is obviously not that same type of company. It's comparing apples to oranges. Your price to sales is 3.07. Another thing that you're not going to see on this, and we're going to get into this, but I want to go ahead and put this out here. Same store sales has growth. I think it was roughly over 20% or somewhere close to 25% year over year, same growth. Like the same store is increasing its sales 25% basically year over year. And that's important to me because that means they are getting more and more customers or more and more returning customers. And that's what really it takes to get that market share away from a company like Starbucks. Again, I don't believe they're in the Midwest. I don't believe they're in the Northeast. They started out in Oregon. They are definitely here in Texas. I see them multiple times. I drove by one today by itself. And again, one of those things that I've seen this happen so many times. So when I see this happen over and over again, I definitely look into these companies. And when you see that they are basically making no money, but this revenue is continuing to grow, it's a growth company, guys. There are no dividends, I don't believe. Yeah, there's no dividends in these stocks. It's a growth company, guys. They are taking everything that they make and they are investing it back in. Now, let's go to the annual, and this is what should intrigue you dramatically. When you ever look at these and you're finding companies that are growing dramatically, again, you are looking at these right here. This revenue bar continues to go up every single year. Now your margins are low, but that's because they're not looking to necessarily make money instantly. They're trying to grow so much. They're trying to get more customers, all of the above to grow this business, and they're not even across. They're not in New York. They're not in Philly, guys. They're not in Chicago, I don't believe. I'd have to double check on that. I don't live up there anymore, so I don't know. But when you look at financials, you are looking at these. So again, let's go to statements again. I think this is something everybody should be looking at. Look at the quarter after quarter after quarter that they are making. Guys, this is a lot of green down here on these percentages that are going up in revenue. Same with the gross profit, guys. Gross profit is a big thing. It's not net income, but gross profit is a big thing on companies that are growing. They're not there yet. They're not making bukus of money yet, but they are continuing to grow, which means they're building more stores, more locations, and building more of a clientele in order to get more revenue. Then eventually, when they slow down that growth, the profits will come just raking in. And I think that's something to be very, very important to. And again, you guys see this revenue is just continuing to grow. And this is the one that you should really, really be more excited about here. As again, your gross profit is just rapidly growing. You see it went public in 2019. And let's go back to the chart. You guys see the year over year over 37% total revenue, 52%, 48%, and 30%. Guys, this one will make $1 billion in revenue. I'm sure that they're over $1 billion. Yeah, TTM is 1.19. Gross profit, look at that, growing dramatically again, 40% in 2023. And they're going to make another big positive year this year, which is fantastic. The one thing I want to look at though on this stock, and you're going to see this a lot. So this is where it IPO'd at. And guys, look at this. This stock was up in the 80s. And now you can buy it at 52. Full disclosure, 100%. I was buying this in the 32 range. 30 and 32. I own shares of this stock, and I missed this giant gap right here. Now, what is allowing this stock to continuously start to do very, very well is private equity, which is what took this thing, and they owned it, and now they've taken it public and everything, and of course now we can all invest into it, is what killed this company's stock. They were making great financial growth out of it all and everything, but they kept selling shares, and that hurts. If you continue to sell shares, you can't get that share price up. It's just like Amazon, and I want to show this because this is the perfect example. When a founder stops selling its shares, when they stop selling their shares, look at that. It starts going up again. Guys, Amazon took a beating at the end of last year because Jeff Bezos just kept selling shares. And then again this year, he was selling more shares, but this year he slowed down on selling shares. He is more active. If you saw his interview here recently, he's much more active in the company again. And they're doing a lot with AI. I'll leave that at that. But Dutch Bros is one of those that if you look at it, they're going to compare with Starbucks. So Starbucks, again, all you gotta do is type it in, S-Bucks. This company trades at $97 a share, guys. Now, they do pay dividends and things like that, and I understand their new CEO and everything else like that. They are doing better. But this one isn't fantastic. Now, their margins are still about 10%. Quarterly, obviously, they were obviously made a change for a reason here, guys. But the one thing I want to go look at here is their PE is 29.4, and you see their price of sales is still 3.06. So Dutch Bros is actually pretty comparable considering Starbucks isn't still growing dramatically like a Dutch Bros is. I think Dutch Bros is going to be much better than, for say, a Dunkin' Donuts. Just from everything I've heard, their experiences and their operations side runs extremely, extremely well from everything that I understand. So this is one that I am definitely looking at here in the future, and I think more and more people should just look into it. That being said, thank you guys for watching, and I will see you guys in the next video.